It seems like the dust has settled a bit. Do you think it's a bit too early to say that the coast is clear, or should we be fading this move that we saw the last couple of days?
Well, it depends which one you want to fade, right? Whether you want the sharp down or the strong rebound. I think the big picture is still that the environment is going to be pretty conducive to risk assets. So growth is going to remain strong. Inflation, we think, is going to pull back lower once we get past the temporary boost to inflation globally. And therefore, policies should remain, particularly monetary policy, should remain very stimulatory. So, we would certainly be in the camp of any dips that we're seeing in risk assets around the world are probably a buying opportunity for investors. Could we see more downside in the short term? Of course we could. I think watching the UK is going to be pretty important. We've all been talking about how the rising COVID cases hadn't seen an increase in hospitalizations. That's obviously reversed in recent days. So still nothing like what would have been expected translation of cases into hospitalizations that we saw pre-vaccination taking place. But I think that is something to watch to see how much that's going to slow the easing of lockdowns. I don't think we're going to see a massive reversal, but how might it slow what we see coming through as well?
Yeah, the rebound in equities was quite apparent that we saw overnight, but we're not quite seeing that sort of rebound when it comes to bonds as well as the oil markets. Why do you think that is?
Well, I suppose we saw 10-year bond yield move a bit higher, and I think that certainly helped some of the value areas of the market. And I think we probably have made now a 10-year bond yield low for this cycle. So we see it gradually moving higher over the course of the next 6 to 12 months to around 175 for the US 10-year. So that is a positive environment, I think, as long as it shows confidence in the growth picture. But obviously, we see people talking about 2.5%. I think that's probably a little bit too strong. This is not going to be a smooth recovery path. It's going to take some time.
So, Steve, as far as equities go, your preference is still Europe and largely the U.S. Where does Asia fit in to this sort of riding the recovery wave? Because that's been really left behind, including Southeast Asia, of course.
Yeah, so for us, Asia is sort of a neutral allocation. So we're expecting it to perform pretty much in line with global equities, so do okay, but not fantastically well. Europe is preferred because of this reopening that we're seeing. So obviously we're watching developments there. As far as Asia is concerned, I think there's two things to look for. Another peaking of cases, which obviously we've seen in some markets, but certainly if you're looking at Indonesia, Thailand, and closer to home, for me at least in Singapore, we're seeing cases pick up again. So I think we need to see vaccinations really being rolled out. I mean, Singapore's made a lot of progress there. We need vaccinations to be rolled out across the whole region for Asia to be upgraded to an overweight. And I think the other aspect is that we need to see the dollar peak out, because that's obviously a great indicator of EM outperformance generally. So if we did see the dollar peak out around 94, then that would probably be good for Asia ex-Japan equities as well.
Right. Just very quickly, inflation expectations have moderated. We're a little bit closer now to your 10-year average here. Do you think markets on balance right now, the risks to inflation, do you think we've kind of priced it properly at this point?
I think it's quite interesting, right? We would certainly think that inflation expectations are going to come lower as more and more people feed back into the labour markets. So the wage pressures that we've seen, in recent times fade. So obviously we'll get to a new permanently high wage level. We won't recede to negative territory, but it is suggestive of an environment where inflation doesn't take off from here, and we come back to closer to 2%, which should keep the authorities pretty comfortable, I think.